Hello everyone, this is Blane Markham, Chief Trading Strategist here at Markham Trading. I'm coming to you with my weekly market update where I'm going to be breaking down what I'm seeing in the market, specifically what I'm tracking, and also too where we're continuing to spot some opportunities for our clients. So let's go ahead and hop in. So right here, we're looking at a chart of the S&P 500 index, and taking a look at this chart here, we can see that the index is still overall in a longer term uptrend, albeit the momentum and pace of the gains to the upside has really moderated over the past couple months. Really ever since we got to roughly the end of October, we started to really lose a lot of that velocity to the upside. We've hit several new all-time highs in the S&P 500 index since then, but it's really just been by a point here or there. It hasn't really been a substantial break higher and a sustained move higher for the S&P 500. It's just been kind of consolidating below this level of 7,000. Just looking at this chart here, you can see there's clearly a very significant ceiling of resistance above this index right now at 7,000. You can see that shown right here. We've gone up and traded near this level 3 or 4 times now, including today's trading on Wednesday as well. You can see in the earlier part of the session, we traded up just shy of 7,000. Ultimately, the rally higher today failed, and we ended up closing down just a touch below 69.50. So even with a really strong job support we got today that, was a catalyst for certain pockets of the market, it was ultimately not a large enough catalyst to propel the headline index higher here and power through that 7,000 level. So bottom line, with the S&P 500 headline index right now, we're still clearly in a confirmed long-term uptrend. You can see that as we're trading well above our 200-day moving average down here. But we're still struggling to find that substantially new higher high. We're still just kind of consolidating in this pattern here. We started to make a nice series of higher lows as well. So we're just kind of compressing into this range between 6,800 and 7,000. And without a significant catalyst one way or the other, I don't see the S&P 500 meaningfully breaking out of this range in the short term. Now, just because our headline S&P 500 index here is continuing to chop sideways, that does not mean that there's not really strong pockets of momentum and bullish activity going on in the markets. We've seen it across different areas that have started to outperform. While tech has been lagging, leading to the consolidation type trading we're seeing here at the headline S&P, we're seeing other areas like the equally weighted S&P 500, small caps, even of course the Dow Jones index. All of these other pockets of the market are continuing to outperform quite nicely and actually have been outperforming the S&P for quite some time. So that's actually what we're taking a look at here next. This is just the equally weighted S&P 500 here, so you can see a notably different chart here. Of course, for much of the past couple of years, the headline S&P index has actually substantially outperformed the equally weighted index. That was, of course, when a lot of the Mag 7, mega cap tech names were driving most of the returns and really trading higher with a lot of momentum. Of course, that has slowed now, but other pockets of the market, whether it's the consumer cyclicals like materials, energy, industrials, even oddly enough, some of the defensive areas of the market, they're also continuing to trade quite well recently. But all these other sectors that have been laggards over the past couple of years are really starting to gain a lot of momentum to the upside. So that's what's leading to this outperformance in the equally weighted S&P 500, the small caps, the Dow Jones index, because of course they're a lot less tech centric. So while much of the tech trade is currently continuing to take a breather right now, we're still spotting a lot of great opportunities out there in the market to get bullish directional exposure just in some new areas of the market. And as you can see by looking at this chart, this current trend that I'm breaking down for you, it's still accelerating to the upside. You can see the equally weighted S&P has been making a very nice series of higher highs and higher lows coming out of the November lows shown right here. And actually down here in our lower study, you can see this is a MACD chart. You can see we actually have a short-term MACD buy signal down here. So that means that this trend that I'm describing to you is actually accelerating as we speak. Now I want to go ahead and point out to you some of the areas we're actually spotting opportunities for our clients in our ETA Trade Alert service. So let's go ahead and hop into some of these areas where we're spotting these opportunities right now. So this is one that we actually spotted a number of weeks ago. This is actually for WFRD. This is Weatherford International. This is a major oil field services play here. And you can see, obviously, the stock has been in a very powerful bullish uptrend for quite some time. Wasn't quite outperforming the market for much of last year, but certainly is returns at the headline S&P have moderated here recently. And this stock has really only accelerated to the upside. So this has become a substantial outperformer here in the past couple months. So we've been watching this trend very closely here. And we actually sent out an alert to our ETA Trade Alert Service members right around here, right after we saw this big gap up right here for WFRD. And the alert was actually to put on a position for a call option purchase for WFRD, assuming that this trend was going to continue moving higher. And so you can see WFRD had a couple further days where it consolidated, traded down to our middle color channel. Then the shares began to reaccelerate higher, just as we assumed they would, powering to those new 52-week highs. And since that point in time, WFRD has gone in a very powerful run. Now, because of the huge move higher that WFRD has experienced, several times along the way during this run, we have actually taken some profits here or there. And that's because we're trying to wisely manage risk. And when we have a nice return, make sure to go ahead and lock in some of those gains instead of leaving the entire risk on the table. But we still do have a portion of this position still open, and it's continuing to run higher. And as you can see, the stock was up just a touch under 2% today. So this trade is still continuing to perform quite well. And actually, at the current prices, this call option that we put out to our ETA Trade Alert Service members is sitting on an open profit opportunity of 661.8%. So this trade is absolutely crushing it right now. It's one that we're really, really happy we could share with our members. But this is not the only recent trade alert that we sent out to our ETA members that's doing quite well. We actually have several that are performing quite well right now. And I want to share one more of the positions with you here right now. So this is actually looking outside of the US. So we've talked about some of the different areas in US markets that are starting to participate that have not done so for quite some time. Well, last year, one of the major stories was that international stocks actually significantly outperformed large cap US equities. And so this is continuing thus far this year. And so we've been eyeing this trend here for VEA. This is an ex-US developed markets ETF. And so this is giving you exposure to some of the trends in developed markets internationally, ex-US. And we can see that this ETF has continued to hit new all-time highs here on a rather consistent basis over the past couple months. And it was after this series of highs right here, we were waiting for the ETF to pull back. It did exactly that. It traded down roughly to the middle counter channel right here. So it was still maintaining its long-term uptrend, but it was just taking a brief pause, allowing for some consolidation to occur before ultimately resuming the trend higher. So it was actually this day right here. Again, we sent an alert to our ETA members, and the alert was to put on a call option purchase position for VEA. And as you can see, the stock shares actually reaccelerated higher in very short order. You can see they moved from roughly $66 per share to the close of today's trading, closing around $69 per share. So that's been a pretty sizable move in just about a week's worth of trading days. And at the current prices at market close today, this call option alert that we sent out to our members for VEA was sitting on an open profit opportunity of just north of 41%, again, in just about a week's time. So these two trade ideas that we've recently shared, the full details with our premium members, have been performing very well. And these are certainly not your Mag 7 mega cap tech type stocks that have become household names, really have driven a lot of the performance over the past couple of years. These are newer opportunities that have really cropped up, that us following the rules of our technical analysis system allowed us to spot these opportunities for our members to be able to put these trade alerts out there. So we're continuing to stick to our rules, continuing to spot some of these great emergent trends out there in the market so we can continue to deliver these great trade ideas to you, our clients. I hope you enjoyed some of these trade ideas that I covered with you here today, and I hope to see you inside the ETA Trade Alert Service. Thank you so much for tuning in to this week's weekly market update, and I look forward to putting this together for you next week as well, telling you where we are spotting opportunity and what we're watching in the market. Until then, take care, everybody.